Before we get into this video, this is a trade that I took yesterday. This strategy has over an 80% win rate. I live stream daily. I have over 38,000 members in my Discord. I'm just saying this because I'm about to show you how to trade. So I need you to know that I very much know what I'm talking about. So please, if you're watching these YouTube videos, do not just watch them like Netflix. Take notes, and it can seriously improve your trading. I want to make as many people as I possibly can make loads of money this year. So make sure you're actually watching these videos properly, and I hope you enjoy. What is up? Welcome back to another video. I'm back in Dubai. That means I'm going to be posting on this channel at least 5 times a week. And because I haven't been, well, let's just say this, if I don't post at least 5 times a week on this channel, then I'll give away 10 funded accounts. Okay, so yeah, comment below if you want to be in that little giveaway. And this is going to be a full top-down analysis on this trade that I took today. I took it to this high right here. You could have held partials and held profits all the way up to these highs and literally all-time highs in the market. It was an amazing trade, and we used an LFVG alongside with the inversion fair value gap. This is such a broken strategy. The win rate on this is stupidly high. I have a 100% win rate this week. So yeah, let's go in and start off with a full top-down analysis on this trade right here. So starting off, let's look at the higher time frames. If I can actually, there we go. So yeah, starting off, let's look at the higher time frames. Let's start with the daily time frame. So the daily time frame, we are simply just more bullish than bearish. Okay, we don't really, there's not really a whole lot going on the daily time frame. Same with the 4-hour time frame. The only really interesting thing on the 4-hour time frame is that we have inversed this bearish fair value gap. So again, if you don't know, we don't use trends, we don't use trend lines. We simply use a daily bias, and we take trades in the direction to what our daily bias is. And all the daily bias simply means is, where do we think that price action is going to go on the higher time frame? And because we've got this bullish candle close above this bearish fair value gap right here, we think that price action is going to go for the highs. Therefore, we're most likely going to take long positions on the lower time frames. Okay, it is as simple as that. Now drop into the lower time frame. So let's drop straight into the 1 minute, and what I was looking for at open on Tuesday. So this is a trade that I was taking on Tuesday. Let's just go to tomorrow here. We're on the wrong day. And yeah, the LFVG, I'm sure a lot of people wouldn't have actually heard about the LFVG, but it is extremely broken. The win rate on it, like I just said, is so high. And starting with today, we actually had CPI. So CPI is an extremely big news event. So you simply go to the 8:30 candle, and as you can see, this 8:30 candle is massive. We have the news high marked, and we have the news low marked. Both of these draws on liquidity will statistically get hit in the market, okay? And yeah, so what does that mean? That means that this news low and the news high is two very strong draws on liquidity. Sadly, at the start of open, there really just wasn't any potential trades to enter into. As you can see, we have the news lows below, we've swept out the news highs. Here's the open candle right here is the open candle. We just pump up, we take the highs here, we just about miss the LFVG, we don't tap into the LFVG, and all of the LFVG is simply the last fair value gap of the leg. As well as that, what you will notice is we have equal highs up here. So I'd look at this market right here, I think, okay, we just swept the news lows, we had quite strong draw on liquidity below, being this trendline liquidity. So we did have some nice trendline liquidity below, which was always a potential target. We might actually want to target that tomorrow in the market, or today, depending on when you're watching this video. So this was a very interesting draw on liquidity. So I said to my stream, I was like, I'm more than happy to take short positions if we get a clean short position. And just as you can see from this price action here, but we just simply did not get any short positions. So if we're looking at this price action, what we will notice is that we get a very nice bearish fair value gap. Now you might be wondering, I actually did not enter straight from this bearish fair value gap. So the context behind this trade trade is this trade, in my opinion, is a bit more on the riskier side. It is not an A+ setup, but it was still a trade that I was willing to take. Now, the context that I did like for this trade was one, we have the equal highs above. Remember, these are 15 minutes equal highs, and my daily bias is bullish, so I'm more inclined to take long positions. As well as us inversing this 1 minute, there is very nice displacement, but the main reason that I took this trade right here was because of this LFVG. Now, it is simply the last fair value gap of the legs. Now, as you can see, we have this little leg down here. We're respecting this fair value gap here, and from this movement down, we are respecting this fair value gap. As you can see, there's two fair value gaps, but I'll just draw out both of them together. We are actually respecting the tiny fair value gap here. So yeah, as you can see, we're literally respecting the last fair value gap of this move down perfectly, and we get the rejection out of this fair value gap. It is not a coincidence. People say, oh, it's just an order block. It's not. It is the last fair value gap of the leg. I'm going to make it a tiny bit bigger so you can actually see the label. And yeah, look, we tap into that fair value gap. You think that is a coincidence how we get this move out? And because I know how strong the LFVG is, the fact that we had this trendline liquidity below did not bother me for taking the long positions. Again, my bias was bullish. We had this very nice break-even point in the market, and we're respecting the LFVG. There's two types of ways that you could have took this play. Of course, you could have entered the 1 minute. The reason why it was a bit more risky is one, we've already taken the highs out on ES, so that's why it is a bit more risky. But two, we also have this 2 minute bearish fair value gap. So what could happen, and what sometimes will happen, bless me, is sometimes you can take a trade off the 1 minute, let's say, but the 2 minute is actually a bit bigger, and the 2 minute will get respected and the 1 minute will get disrespected. Okay, that didn't happen here, and most of the time that won't happen, but that's something that you might have to be careful for, because you could be right about a trade and just execute a tiny bit wrong, and obviously you don't want that happening. You want to make sure that when you're right about the direction of a trade, you want to really make sure that you get a winning trade. So yes, one, you could have entered here, your stop loss to break even right there, and then simply hold for that high there for a nice risk to reward around the 1 to 2. Or you could do what I done, which is a bit more of an advanced play. Now, I actually did not enter straight away on the inversion, and again, we do not get stopped out here if you enter on this candle close, because our stop loss is only if we get a candle close below the fair value gap. Okay, I do not care about wicks like this. I'll only get stopped out if it is a candle close below this inversion fair value gap. And now I seen this rejection, and then I seen this nice, a bit of a string, not really a displacement candle, but a nice bullish candle right there. So this is exactly where I entered into the trade. And again, I said on the live stream, this is a bit more of a riskier entry, but I am entering into a long position here. My stop loss goes to break even right here, and I was holding for this high in the market. Now, the risk to reward that I think I got an even better entry, like right down here. So this was a 1 to 3 risk to reward play for me. I did enter it a bit light, that's why I did not take partials. If I entered this on normal contract size, I would 100% take partials here, move my stop loss to break even here, and then hold for this high, and then leave them runners for the equal highs. But because I entered a bit lightly, I played out all for this high right here, and as you can see, we get amazing displacement up. We hit our break-even point, so at this point we're literally risk-free, targeting these highs, and yeah, from here in the market we literally just keep pumping up and up and up. But then we actually get debatably a even nicer setup. Now, as you can see, we come up right here, and at the end of the stream I said the only play that I would possibly be interested in, this is exactly what I said the only play that I'd be interested in is if we come down, get a bearish fair value gap, and then inverse it and go for the highs. If you watch my live stream, by the way, you can watch me trade live completely for free in my live stream, then yeah, that's what I said. And as you can see, we have this bullish fair value gap here. Look what price does. Come down, tap into this bullish fair value gap, we create this 1 minute bearish fair value gap. What does price do? Price inverses this fair value gap without taking this internal liquidity. Okay, this trade's definitely better than the trade previously. Now, because this trade did not take the break-even point, this is such a high quality setup, because the chances that this is at least a break-even trade is extremely high. So you'd enter there. Stop loss is only if you get a candle close below. Your stop loss to break even goes to there, and then simply you take profits at the highs or you take profits at the equal highs, and that is exactly what you're going to do. Stop loss to break even right there, and just look at this trade. So many people in my Discord caught this trade. Well done if you caught any of these trades. In my opinion, this first trade was a tiny bit more risky, but it definitely had the confluences to enter with the LFVG, whereas this trade right here, very clean, because we didn't take the break-even point. A lot of the times you might find that this trade does take the break-even point before inversing, so this is literally a perfect trade. And yeah, well done. Literally a 100% win rate this week. If you want to watch me trade live, all of the links are in my bio. Leave a comment below with a nice message if you want me to keep posting on this channel. I can literally post daily on this channel, daily recaps to help all of you guys out. And yeah, all the links in the bio. I hope you enjoyed this trade recap video, and I can give more of them out. Like this video, subscribe. I'll see you all tomorrow.